So, hi Amir. For the average investor, what do you think are the two most important drivers of returns in their investment journey?
I would have to say asset allocation and time horizon. Asset allocation refers to the investment mix of assets, whether it's equities, bonds, gold, real estate, etc. For time horizon, it refers to how long the investor chooses to remain invested in the markets. Putting all this into perspective, investors in general should adopt a long-term view of the market and have a relatively large portion to equities, since historically equities outperform other asset classes.
So, given that the markets are at all-time high now, wouldn't it be risky to allocate a large portion of their portfolio to equities?
It depends. If we're talking about the US markets from a valuation perspective and the fact that the S&P is at an all-time high, there may be a case to be cautious. But when we talk about the emerging markets, especially with regards to Asia, I believe most investors sitting on the sidelines are missing out on a fantastic market rally supported by valuations and growth that is set to continue well into the year of 2018.
So, why do you think most investors are still not investing in the emerging markets?
Definitely fear. My general feel is that investors are affected by the recency bias that Asian markets have underperformed over the past years, and I feel that that is a mistake.
So, now that emerging markets are on a rally, how do you think investors should act on it?
Okay, they can employ three strategies. The first one is dollar cost averaging. They need to add regularly to the portfolio. The second one is strategic asset allocation. They need to diversify their equities exposure. Basically, it is smart to have a global exposure of equities, but you can underweight the US and overweight Asia. And lastly, I feel that you need to have cash to take advantage of potential bear markets. When a bear market comes along, as it does every few years, it generally lasts for 15 months with stocks declining at an average of 32%. Historically, these bear markets are superb buying opportunities for investors.
Thank you, Amir.